Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dream of owning a home or investing in one. Today's show, we are going to discuss where is the money? This topic, we're going to be discussing alternative ways in which one can get money to buy property. And this is geared mainly to those who want to be real estate investors. Okay. Well, a lot of people, including myself, we used to say, hey, I can't afford it. No, when it came to property, that is, real estate property. Well, I come to realize recently, it's like really hit me with a ton of bricks that we need to stop saying that. There is money out here waiting for you to catch it. We just need to learn the principles and we'll be all right. To be honest, my mastermind group, several people in my mastermind group, they don't use their money to buy property. They use other people's money to buy property. And when they first told me this, they had to tell me like over and over and over and over again. And I still didn't get it. It wasn't until recently when I went away to Web Summit. There was a lot of venture capitalists there. There was a lot of angel investors there, just giving money away to a lot of startup companies. Many of them were not even in real estate, but there were a few real estate companies there as well, which I was shocked. I was not expecting that at all. See, I was really there just for marketing purposes. But anyway, it's true. You do not need, especially in today's world, you do not need your own money when it comes to business. You can use other people's money. There are people who are willing to give you their money to go and invest, as long as they agree with the terms, you agree with the terms. And of course, there's a split, meaning there's 60-40, sometimes 70-30, some kind of, sometimes yes, sometimes 50-50. But to be honest with you, there's not too much 50-50 going on nowadays. Anyway, let me move on. I know that what I've said to some of you probably sounds very profound. And you might have to even play this video more than once until it actually sinks into your head, just like I had to keep hearing over and over and over again, you can use other people's money. And you might not just listen to my video, but listen to a few other videos out there where they talk about using other people's money, such as Chris Haskins, such as 100% Finance. And you can learn from them, because those two guys have way more experience than I do when it comes to using other people's money, okay? But what I realized, particularly after this conference, that I can probably afford just about anything I want. It's just a matter of putting the deal together. The first thing that all of us need to do, and I had to do, was you have to believe that it can be done and believe in yourself. That's going to take some deconditioning, and it may take years. But if you know what, as long as you get there, the important thing is that you actually get there. The next thing that you're going to have to do is improve your money management skills. Learn tax savings, which I've shared information in the past on. Learn to cut expenses, which I've shared information on. Learn to decrease your debt and repair your credit. Now, I'm going to be honest with you. I had a mother that was on me about my credit, so my credit never really was bad. So when it comes to repairing credit, I am probably the worst person to ask. But I know that there are people out there that will assist you in getting that done. And I know that HUD is one office that will do it for free. I know that In New York, we have the financial empowerment centers that will do it for free. And we have a number of other organizations that I found out that will fix your credit for free. And what I'm noticing is that some people who listen to my video, I don't think they realize that credit is actually repairable. It is. Again, you need to believe. Okay. Next, got to get a good team behind you, and a good accountant and a good lawyer is where you want to start. The next thing that you need to look into: self-directed IRAs. Some of you don't have one. I believe you should get one. Now, honestly, since I am not a financial advisor, maybe it is best that you speak to your accountant or a financial advisor first. But here's why I like self-directed IRAs, okay? Self-directed IRAs allow you to grow your money tax-free. You can put real estate in it. You can put precious metals in it. And many of the custodians and the administrators in some of these self-directed IRAs will get other people, other account holders, to do deals with you. All you got to do is tell that administrator, that custodian, listen, I am an real estate investor. I look for properties, I look for notes, I look for tax liens. I can't buy those by myself. Can you hook me up with someone else within this self-directed IRA platform that wants to invest? And then, you can set up an appointment with us. We can talk and we can do deals together. They are self-directed IRA custodians that will definitely do that for you. So you don't have to use all of your money. You can use someone else's money. Okay, and then split it. Next, doing YouTube and podcasts. I have a lot of people approach me who want to do deals with me. Some don't want to necessarily do deals, but there are lenders who say that they're willing to lend me money when I get the chance to get a deal that costs more than X, Y, and Z. Right now, I just have like their name on a list, but what I see I can afford, and I'm still working on them, and it's going to take a while to work on those particular deals. So that's why I haven't taken them up on their promise. Plus, I know that I need to do a background check on these people before I go ahead and do it. Just because somebody is willing to lend you money, that doesn't necessarily mean that they're honest either. So that's why. Next, HSAs. Those are healthcare savings account. You can take your healthcare savings account money and your self-directed IRA money, put it together, and buy property along with other people who are also in that HSA platform. Again, the administrator or the court or the administrator, or I forgot the name already of those people. They will match you up with other people who have their money just sitting in the account, want to invest, but they just don't want to do any work. They want you to do the work, or they're looking for someone else to do the work for them. And they're willing to do a 60-40 split with you, or a 40-60, or a 70-30, however it is that you want to do it. You see. Next, you can use your credit cards. Yes, especially if you own your own business. You can use that credit line to purchase property, notes, tax liens, etc. You would have to cash out, of course, because you can't take those to the closing. But that's another revenue stream, not revenue. That's another stream of money that you can use to help you purchase property. For those of you who already have a home and you want to get into real estate investing, you can use the equity in your home to buy more property. The banks are willing to do it. The credit unions are willing to do it. There's even a company called Unison that's willing to do it. And speaking of Unison, let's go back and talk about what they do. Unison, for those who are first-time home buyers, prevents them from having to pay PMI. So let's say you have good credit, you have some money for the down payment, but you don't have the full 20%. They're willing to loan you the rest of the money to make up the 20% as long as they get 17% once you sell. And they only take 17% of the price the home was originally, not the appraised value of the home. So, for example, let's say you bought a house in 1999 for $250,000, right? But you only had 10% to put down. Unison would come in and put another 10%. And let's say it's 20 years later, this house is worth $4 million. When you sell that house and you get $4 million, you don't give them 17% of the $4 million. You give them 17% of $250,000. That's how that works. Incredible, I know. But that's how it's done. Then you have hard money lenders. Hard money lenders are people who, yes, they're going to charge a higher interest rate, but who cares if the interest rate is high? Why? Because you're going to pick a property where the numbers give you such a high return that it doesn't matter what the interest rate is that they're charging you. The thing is, you got the money. The thing is, you're about to make money and take a sizable profit out of that money because you're the one doing the work, not them. All they're doing is qualifying you for a loan. Same thing with private money lenders. Private money normally doesn't charge as high of the interest rate as hard money. Private normally is less, but they are normally higher than the banks. But yes, you can use money from the private money lenders. There are databases that have both hard money and private money lenders listed on it. Next, as mentioned before, you have angel investors. Angel investors don't just go to big conferences. Angel investors, you have meetup groups just for angel investors. And some meetup groups are not just for them, but they're for entrepreneurs, startups, and angel investors and venture capitalists will actually go to those meetings. So you don't even have to go to a big conference that has a pitch fest. You can go to a little meetup group and find them sitting right there. So guys, I wanted to share that with you because of an old way of thinking that I had that has recently changed, and because of a conversation that I had with several people in my mastermind group as well. So guys, hopefully the information that I have shared with you will help you make smart financial moves. Remember, feel free to pass this along because each one, reach one, teach one, or teach many. Bye for now. Until next time, have a good night.